Hello guys, in our previous video we've talked about how we can buy low and actually sell high using the Fibonacci retracement tool. So we're able to illustrate in that video how we can use the uptrend scenario. And as I've said that in the subsequent video, which is in this video now, we're going to look at how we can apply this to our downtrend. Okay, so the first thing you must know is for you to be able to apply Fibonacci retracement effectively, you need to understand your trend, and then after understanding the trend, it is also important that you know your range, because your range is where you will be connecting the Fibonacci retracement tools to. And that is why the understanding of the range is very, very important as far as this trading pattern is concerned. So looking at this is a typical scenario of price giving us, this is a lower high, right? This is a lower low, this is a lower high, and then here is our new lower low. So the question now is, where is the range? The range is that impulsive movement that you are concerned about. And what I mean is, this movement you are seeing here, this is the impulsive movement. This pullback is only a corrective move. This is an impulsive move. This one to this upside is a corrective move. So this is a correction. It is a retracement. Okay, then this is the impulsive movement. So in a downtrend, our concern about the application of the Fibonacci retracement tool is connecting it to the impulsive movement, which means that we are concerned about this movement that came all the way from here to here. Okay, so we are not much concerned about the retracement. Our Fibonacci is going to be connected to this particular move. So you need to understand and be able to determine your range, which means if we are to connect our Fibonacci to, this is the level we'll be connecting it to, just from here to here, because this is our range. So you'll be connecting it to every new range as the market progresses. Now, if you don't know the setting of this Fibonacci tool, nor the range, you need to go back to what the previous video where we discuss everything in detail, how you can get your Fibonacci retracement tool, how you can do your setting, and the reason why we are using these few settings. All of these are available in the previous video. So having said that, let's look at what happens here. Remember, this is an uptrend, and in this scenario we have price move in this up way. We have this low, we have this, and then we have up to this point. Then subsequently we had price came down and break structure here. So this is a break of structure. So when we had this break of structure, what do? We'll now focus on what? Our point of interest. And we said the point of interest could be an order block. So now, considering this movement, what do we see? So the range we are looking at is simply this move from this zone. This movement here to this point is our range, right? Then after that we have this particular one. We have this pullback here, and then we have this other impulsive move that gave us a new low. So what are we considering? Our first consideration is on this particular range that came all the way to this point. So this is the range we want to consider. Okay, and this is the range that breaks structure somewhere here. So now we'll look at this movement and try to identify if we are having a point of interest. So in all of this range to this downside, what is our point of interest? First is our order block. So here we have a typical order block. So what do? We will mark this order block That's great. So we have our order block being marked. So that is our point of interest. So having marked this order block, price already came down. Okay, price book structure here, and then price now pull back. So now what exactly happens in this scenario of a pullback? Price pull back. Okay, however, aside this other, if you look at this particular point, we are having something like, here is a fair value gap. Okay, we have that fair value gap on this particular candle is where the fair value gap is. But however, now that we have determined our range, once price begins to pull back, that is when you will now bring your Fibonacci retracement tool. So let's pick up our Fibonacci. So we are going to connect it from the week to the next week where the pullback begins. And here we are. So perfectly well, look at what happened. Price pull back from here. You can see that long wick up to 78.6 of our Fibonacci retracement tool, and then you see that rejection from there. So our entry is always here. We would have sold here, sell here. Our stop loss is above the 100 level, because any retracement that closes outside this 100 level is no longer a retracement but a break of structure. So that is exactly how that can be done. Any retracement that closes above this 100 level automatically become a break of structure and no longer a retracement. So you can see how this works, right? So how do you make your entry? If you come to your 1 hour time frame, let's see, you can see what we have there. On our 1 hour, look at this. This is our entry, right? So you can see the rejection of the bullish candle first, then followed by that particular bearish candle. So if we are to make entry based on candlestick pattern, this should have been our entry here, and then our stop loss up there. And you can see how beautiful that trade plays out. It plays out perfectly well. Okay, so now let's go back to our 4 hour time frame. And then now we are going to look at our new range. So what is our new range? We are done with this. So our new range is this move. Okay, is this current move that we are having here. Because this correction now went up, this move that came from up to take away this liquidity here to give us a new lower low is our new range. Let me see how I can delete some of this to make it a bit clearer. That's great. So this move from here now, where you just take your trade, that impulsive move is our new range. And if we look at that range now, what do we see? Do we have any point of interest in this move, this particular move that came down here, not this correction? Let's look at. First, we have our order block on this 4 hour time frame. Okay, so let's look at that. Beautifully well, all of this zone is our order block. And then afterwards, what do we have? We are having a fair value gap. And please, you can watch out our previous video if you don't understand how to get a fair value gap. Okay, so now let's connect our Fibonacci retracement tool. So obviously, I just connect a Fibonacci retracement tool to this new range. You can see that now this is where the twist lies. So looking at this movement, right? Price did not reach the pullback, did not get up to 50% of our Fibonacci retracement. The pullback did not get up to 50% before it went down to give us a new lower low. So for that reason, we are not taking this entry. Because if we are to trade this, it means that our entry should be somewhere here and our stop loss is here, which is very far. So this is not a discount trade and it will not be ideal for us to be in such trade. But however, remember we say there are two ways of we connecting our Fibonacci. We can connect it body to body and week to week. So if you are a type of trader who doesn't like to leave anything to the market and you want to connect your Fibonacci to week body to body, so let's see. So we are considering that same range in another way. So look at this, connecting our Fibonacci to the body of the candle to the next body of the candle. Why are we considering these two as well? Because when you are considering structural point, you do not consider the wick of the candle. When we are dealing with structural point, we only consider the body of the candle and not the wick. So that is why I have to explain this. So in this scenario, if we are to go with that, here is our lower high. This is our lower high, right? This is our lower low. Here is our new lower high. Okay, and then here is a lower low, here is a lower high, and then we have a new lower low. So if we are to consider all of that, it means that presently price has pulled back to our point of interest, which is the fair value gap that we are having. So this pullback is a pullback to fill into the fair value gap. You can call it imbalance, you can call it improper price action. So let's come to our 1 hour time frame and see what happened. You can see that even on our 1 hour, we have that fair value gap there. And look at what happened. Price pulled back into it, gave us a bearish engulfing candle after a little range of the market. And then from there, price moved to the downside. So that could have been our beautiful entry. So you can see exactly how this pattern works, how simple it is, how you can capitalize on it, how you can take advantage of it to improve your trading strategy. This is the advantage of the Fibonacci retracement tool. It helps you to buy high, to sell low, and when this level coincides with your point of interest, it becomes a double confirmation for you as a trader. And I believe you have learned something interesting from this episode. More detail is in the previous episode before this. And if you have not subscribed to the channel, what are you waiting for? Go ahead to smash the subscribe button, turn on your notification bell so you'll be the first to get notified when we upload our next video. And please do us a support by liking the video, comment, ask your question in the comment section, and there is a link in the description of this video that can take you to the Telegram group where you can be a member of our community, where you can also reach out to us if you are interested in our mentorship training course. Thank you for watching and see you in the subsequent video.